Hello traders, Nick Shaheen here looking at Tesla, and it just reported earnings, blew everybody away, and the rally continues. So this is a pretty emotional stock, less emotional now than before. I used to post stuff on Twitter and get a lot of hate mail. So I'll try to be as impartial as I have no emotions tied to this stock. I have traded it mostly on the long side and won. I shorted it a couple of times through selling calls and won. So, but I prefer to go long it on big dips, and I haven't traded in a few weeks. My last one was I sold puts into this dip, collected $18 or $19, I can't remember, and I bought them back at $11 or so, so made some money there, and I walked away from it because it just got too murky. And so they just reported a surprise profit. Hey, you know, when Amazon did that, everybody went, what? You know, so it's a reason to chase it, or pop it, I should say. So from here, what do I do? So I don't know if one profit quarter changes the story. I can't trust a lot out of this company. When Elon speaks and gives dates, it sounds like he shoots from the hip, picks dates out of blue, and then we hold him accountable to it. So I do remember in the past, whenever I argued or discussed Tesla with somebody, or somebody made their point on Tesla, they always said, it's not a car company. It's not a car company. Well, how come if it's not a car company, every headline from Tesla management or tweet or whatever before he stopped tweeting was about how many cars he's going to deliver. Didn't talk about anything else. This is how many cars we're going to deliver. This, I don't hear anything about their. I used to say you can't short it too long because the thesis is so wide. They have panels, they have this, they have gigafactories, they have that. And they have other stuff that they're promising they're going to do that we don't even know about, yet it's a car company. How many cars can they produce? How's the Model Y going to come out more popular than the Model 3? By the way, how many of those 400,000 Model 3 that actually stuck? I don't know. You know, they celebrated the stock. They sold a tremendous amount. I had friends who bought it, friends who got tired of waiting. So it's a muddled picture. Fundamentally, it's not cheap. So if you look at it, okay, they turned a profit in one quarter, but it still sells about 2.5 times sales. That sounds cheap. That's cheaper than Apple. But if you compare it to a car company, GM is 0.3 sales, and Ford is less than that. And GM and Ford pay a dividend. So this is, as a car company, if indeed it is a car company, it's astronomically expensive. So it's okay to do that if it's a growth company. So if it's a growth company, they better show us they're going to deliver 10 times more cars in the future for this $2.50 to come back in line with the other guys. So that's the big picture. If it's a car company, if it's still a technology company, please do tell us what the rest of the stuff is. Or, you know, it's not SpaceX. People say, well, look what he's done at SpaceX. Yesterday on CNBC, an expert was saying how this is good about Tesla, this is good about, and then he goes, look what he's done at SpaceX. It's like, what the heck does that have to do with Tesla? You know, I don't know. Look what I did in my garden, so therefore you should listen to me what I show on the charts. It doesn't make sense. So the charts are the only thing that actually doesn't lie. This was an upside target that I had from before that never came to fruition. And I put the target here because of prior history. And look at where we're at right here. Look where we stopped yesterday, right here. So I didn't pick it out of the blue. This little doohickey was not out of the blue. Same with this one. I said, okay, we have a tight range. Something's going to happen. We're either going to do this or do that. We did this first, and now we're going up. So these lines matter. I keep them, and then I delete them as time goes by. So we're going to see where this comes from, because it looks pretty darn important, and how I can trade it. All right, so this is the daily chart. Every tick is 1 day. If I wanted to go more granular, I'll go to a 60-minute chart. So this kind of tells me as to what the market's going to do now. Yesterday's pop was a line to breach, so it'll be interesting if we close above it today. Okay, so that's important to keep in mind. This is also important. So look at that giant gap down here. You know the shorts are drooling, and they should, because to me that's a surprise pop. I don't know if he's going to have 2 quarters of that. So now he has 3 months to fix the second quarter. So until then, this line will be a trigger. And in fact, if I wanted to put an alert here, and I'll say gap question mark. I don't know. So if price gets to here, I'll give it some room. I'll get an alert and say, look at Tesla. Might be a short opportunity there. Okay, so that's one way. And I want to see what it does versus this on a closing basis. All right, so that's the granular. What if we go up in a helicopter or in a drone? Now we get a little more clarity. Too many lines, right? But this is that red box I told you about. And look at that. It's from before. You know, different color, but I drew it before. Every box was important. So I'm going to stay on this picture here, and I'm going to take away the lines to eliminate the clutter and maybe mark it up live. So this is what I would do with, let me see here. The market's open. Whoops, what the heck? That's new. Okay, the market's open, so things are happening. All right, so weekly candles. Every candle is 1 week, so this one is not done yet. We don't know where it's going to close. And a few things I can learn from the chart. Forget about what this is. You know, this is obviously Tesla, but forget about it. It's a chart, and let's talk about the chart. This is 5 years. So 5 years ago, until 2017, it was stuck inside this box. And then here, something happened where we said these two earnings reports. This one almost did it. This one definitely did it. Said, you know what? We so mispriced Tesla. Let's go up a different level. So they went from trading this box to trading this box, right? Consolidation. Yeah, we did have two corrections here. Let's ignore these for now. But if you look at it, they came back to the pivot point. Actually, I shouldn't ignore these. I'll talk to them and I'll stick. So this is like the demarcation zone. It's not a hard line in the sand. Where is that? 260. Okay. All right. So they were playing down here, and then for the last 2 years, 2.5 years after that, they said no, this is where Tesla belongs. And then right here, Tesla lost its mark. Let's call it the 300. It's psychological round number. And then whoa, down to, remember, it's like they're going to run out of money. And that's not a coincidence. Look at that. Almost to the penny. Almost to the penny. Okay. So here we go. Higher. So ABC kind of a deal, paid real quickly. Came back to the neckline and failed. Came back to the neckline, and then the earnings jumped it above it. So now the onus is on the bulls to prove that this is support. This was resistance. Now it's going to be support, question mark. How do they prove that? By dipping a little bit. So it's okay to dip and then get above it. And then this would be the trigger line that we were talking about. But look at this. This is the bottom end of this zone. It's not going to be butter, in my opinion. There are several lines to, I shared them in the chat room, to look for. Like 320 eyeball, for example. This was a major fail point. So if I were a short, I want to put stop losses. That would be one of them. Like if they take that out, then hey, there's something else going on that I may not know about. Okay, so I have to be open with it. All right, another important thing that this chart tells us. So these are volume bars right here, right? You can see how volume was low down here, and then it stepped up in volume, and then stepped up in volume. It's been high in volume, visually higher than this stuff, right? There's nothing down here. Okay, so how do I translate that? So this is a volume profile right here. This highlighted yellow area, these are the same volume bars, only they show them as to where they happened on the price axis. So I can tell you that most of the action happened from here, which is 306, down to here, which is what, 190 whatever. So not a lot of information, right? But what is a lot of information is this line right here and this zone. So this orange line right here, 229, is the actual point of control, meaning this is actually where the bulls and buyers and sellers agreed the most, fought the hardest. But there's a whole bunch around it. So it's good support. So this zone should be good support on the way down next time. Okay, so if I were to say sell a put or sell a put spread, I would want to hide behind them. And visually I can tell you this is one place to hide, this is one place to hide. This would be an overreaction. You can think, I would think that this was a headline of sorts that really is not going to happen again for a while if the markets hold up. So if I were to sell puts or put spreads, I would be down here, and I'll bet you I'll find about $2, $1.90 for selling naked puts. If I want to own the shares, I can sell naked puts. Otherwise, it's crazy, but I do that. There are put spreads down there that I can sell, probably here. So I either sell a naked put here, it gives me a bigger buffer, but bigger risk. I'm naked long Tesla. If it falls to zero, I lost $200 a share, versus a put spread where I lose $5 a share, or actually less because I collect money. So how would I trade it? I would probably trade it with a credit put spread for sure, and maybe a credit call spread. So what does that mean? You've heard the term before, an iron condor. Okay, so the idea is to go short and long. Short and long Tesla. So I short it above a place where I think it's going to fail again, and I go long it above a place where I think I have support above it. In other words, I'm trying to guess a range where Tesla is going to be for the next X period of time. I would pick next January. So January would not include another earnings report. I don't want this. I want boring. So if I'm not bearish Tesla, I should just do the credit put spread. If I'm strictly bearish Tesla, I should just do the credit call spread. But if I think that Tesla is going to be in between those two prices because of this point of control zone that I told you about, this pivot point that could be support based on this candle, then the credit put spread is not a bad hedge for somebody who wants to short Tesla. So if I want to short Tesla by selling the stock right here, like the typical naked short, I don't recommend it for me. I don't like it for me, I should say. It's unlimited losses. I would definitely put a stop above a place where it's failed before recently, like anywhere up here. The 320 is a clear line. We'll go check it out on the shorter term. So again, the idea is to try to pick a zone that is likely where the price is not going to leave. So what are the odds of Tesla being above here? Pretty low. What are the odds of Tesla being below here? Pretty low. So if I can find a $390, $400 credit call spread, bear call spread, whatever we call it, how does that work? So if I sell the 400 call and I buy a $405 call and I collect 50 cents for it, it sounds low, but it's about 8 to 10% yield. And I do the same metrics down here. So if I have a trade where I sell an iron condor and it yields about 15% on a conservative basis in the next 3 months with 85 to 95% theoretical odds of success, that's a trade I'm interested in. So a lot of critics of it, they say you're putting too much money on the line. I look at it from risk reward. Risk to me is two pieces. One, the amount of money I'm risking. Yeah, this one is a little higher than the other one. And two is the odds of success, percent. So if I'm okay risking my money, I want as high a percent of success as let me put it this way. I would rather risk more money with higher odds of success than smaller amount of money at a coin flip level. So yeah, I can sell the call spread right here and risk half as much money, if not less. But then I'd be at a 50% odds. Sounds high, but that's a coin flip. Might as well go to Vegas. 70% would probably be somewhere around here. Again, yeah, you can do that. It's not my style. I'd rather get boring ones because I know I can manage it. It's not going to crash up like this one too many times. But anyway, my take on Tesla, and I've just shared how I would trade it. This is not a recommendation to trade anything. I'm sharing my own setups in using options on Tesla. But as far as the opinion of the price level and the chart things, it has nothing to do with the trading. It's just how price unfolds. Okay, so I did promise I would go into and see where it has failed before. So if I were to stop myself tightly, Yeah, 320.1 would be a place. And it's like, what the heck if they beat it? 324.3 is another one, and another line is like 327.4. Tighter than that would be this little gap right here. So 311, this fills a little gap here. There's a gap to here, but there are three major fails ahead of it. This one is like, it's in clear sailing until it gets there. So a secondary line would be 316.3. So it all depends on personal preference. And it all depends on where they close. So last night, Amazon reported, and it fell and it's recovered. And the stock market is kind of frisky on really no news. It's just price action. I don't know why people don't talk about this more often. So this is the SPY. I mentioned this because this has bearing on Tesla as well. So if the stock market is falling, Tesla is not going to rally on its own. So here the SPY, we're knocking on a roof for so many times. So 301.5 would probably launch another leg higher, but so would losing these 2-3 lines. So range is tight, something's coming. If this happens in the market, Tesla will fail. If this happens in the market, Tesla